Hey, we are back, good people. Technical difficulties, but we are back. So, hey, let's do it over again. Kenan, you cannot come on and don't hit us with the
There it is.
Kenan vibe, man. Come
I
on, hit
got
us
you.
with it, Kenan.
This is not financial advice. I just hope you brought your oven mitts, baby, because it's about to get hot in the kitchen. Let's get it, everybody who was just on the other live. Put 100 in the chat so we know that you now came back to this one.
Mo,
Oh my.
what you got, Mo?
Yeah, you know what? I'll throw it out again, man. We've been rolling, we've been strolling, we've been loving the market, a lot of green, a lot of dough. And of course, this live stream's so good, we're doing it twice. And for those that joined us at the other one, you're back with this one. This is twice and it's 2 times better. We'll just leave it at that. And like I said over there, stick around because I think you're going to like what we got for you.
You guys know we're over here. It's what's up, good people? And we sign off with live, love, laugh, and learn. We're going to live, love, and laugh and learn for the next 60 minutes or so. And we're just going to get right into some things. We're going to hopefully help you guys out with your trading journeys. And hey, what I love about it is, look at the 100s just popping up, man. I love you guys. Yeah. Man, we got the best audience. This family is growing.
There's no doubt about that. No doubt.
That's it, man. Hey, I came on to another live and I just saw all of this negativity and I was just like, what?
Ooh.
Like, man, I was like, thank God for our family, man. You guys. Hey.
Were they fighting?
Yeah, it's just negative, you know? Or what? See, they weren't like that person, right? They wasn't like this person. And they weren't like this person that's asking y'all to hit where you guys at?
That's right.
GB's in the house. Who we got? Shanna in the house. We got George in the house. We got Cortez in the house with the coffee cups. Y'all, come on in. We got Colin Mack in the house. Who else we got?
I see Summer W from North Carolina. I got a lot of family down there in Raleigh.
Come on, North Kakalaki. All right. Uh-oh. Kenan, you're going to have to address this one. Failed to take profits again on AMC.
Oh, boy.
Hold your hand out.
I hope it wasn't an option.
Hold your hand out. Whack.
I hope it wasn't an option. I hope if it's the stock, you might be fine. But if it's the options, family, they expire. Come on now.
All right. Who else we got in the house? We're going to do about 2 more minutes of shout out and we're going to get right into it.
Yep. We got Vegas in the house, Charles, New Jersey in the house. Everybody hit the like button if you just rolling in. This is easy to get 100 likes, 100%. Let's get it. We want to keep the likes up, family, way up.
Daniel in the house. What's up?
That's what I was saying. Hit that like button.
Yeah, let's get this likes up. We got 600 people watching. We got 300 likes. Hey, that's good. That's good. Got South Carolina in the house. Hey, how you doing? Pronounce that, one of you school teachers.
Look, I'm not an English teacher. I was a business teacher, man. That's
right. I was an engineer to
my wife.
Oh, hey, I'm going to open up and we'll come back to y'all, fam. Hey, Myrtle Beach. We got Greg from Myrtle Beach. Hey, I'm going to ask you first, Mo.
Yeah.
Simple. Are we in a recession?
Now, look, I'm glad you're starting out with this. And I'm going to be perfectly honest. I've been talking about this over at my channel. And here's my opinion on this. There is no doubt in my mind that we were in a recession. And that is Q1, Q2. In my opinion, and I 100% believe that after Q3 is officially done, the data is released, they will say, guess what? We're no longer in a recession. We'll have positive GDP growth. I'm expecting between 1% and 2%. And then Q4 probably should be decent depending on the Fed and a couple other variables out there. But at the end of Q4 is when I'm getting nervous. Into Q1, Q2 of 2023. And guess what? We're going to be in a recession again. And I think this one is going to make the first one here, which didn't seem that bad, very mild, very quick. It's going to be one of them double dip recessions. And it's going to get ugly for the next one. I think the Fed overdoes it. And I think it goes too aggressive. They came out in their minutes today saying they felt that 2.25 to 2. I think it was 2.25 to 2.5 was considered neutral to them. Mm-hmm. I know I shared that University of Penn with their professor over there, Jeremy Siegel, I believe it is, who said that he believed it was around, anything above 1 point something was going to be considered constrictive. So the Fed, to some of the big experts out there, are already above, and others believe they need to go a lot higher. So there's a lot of opinions. But my opinion is it's going to get ugly in 2023. And now I know a lot of people saying, well, Mo, you're bullish. I am for this year. I actually believe for the rest of this quarter through Q4, most of Q4, we're going to have a bull run. I believe you're going to continue to see gains. I believe that the stocks we have right now, some of the growth stocks, should do very well. I believe financials are going to do extremely well compared to a lot of the other stocks out there. So if you ask me what sector I like the best right now, it's financial. So I think there's money to be made for the next few months, but then we have to be very careful. I'm actually considering going into a short position starting out next year. And this is something I haven't done on my channel. I know a lot of people don't realize I actually would be willing to do that. And that's something I'm highly considering to take advantage of what I believe will be a very weak time, because I think the Fed's just going to plainly overdo it and mess up. And that's going to hurt the market. And then there's some other variables out there. It could hurt China, Russia, all the energy, all these things. And you're seeing a lot of unemployment numbers. I should say companies out there laying people off all over the place. So that's what I'm thinking.
We got Nigeria in the house. We got Las Vegas in the house. We got Cuba in the house.
Cool.
What's going on? So what do you think, Kenan? Are we in a recession or not? Because here's where I think the three of us will differ.
I personally think I got to agree with Mo on this one. I think we were in a recession, like a traditional recession. And, to be honest with you, it's funny that we have to even, and I don't want to get political with it, but this is political, right? The recession talks and the government movement,
really
and everything like that. What gets me is, by definition, we are in a recession, but everything changes nowadays. There's like someone said, and again, I'm not trying to get political or nothing like that, but somebody said this is a recession that is not identifying as a recession. Like, and I'm like, what's going on now, right? So again, it is what it is, but it's kind of a soft recession, right? It's not like a crazy one because we haven't seen the housing market crash with the equities market, the stock market. We haven't seen these things both crash all at once. So then people aren't just losing across the board, right? And in some cases, people who've been dollar cost averaging, right? That $5 a day, you know what time it is. You've been dollar cost averaging, you might just be in the green, right? Because you've been getting your average lower and lower and lower. Now, I want you to understand this though, because I like to think about and consider who is actually listening to me when I speak. And when I think about my audience, I know Elon Musk isn't listening. I know Bill Gates isn't listening. This is everyday people, right? This is people who probably pick up an extra shift at work some overtime to get some more money, right? You don't got millions of dollars sitting in the bank, billions of dollars sitting in the bank. So when we think about recessions, we got to look at it not the same way that the elite look at it, where, oh man, our companies are going out of business. Our companies are losing money. How can we reduce the marketing budget? We're not thinking about the marketing budget. We're thinking about how we could get in on some of this because they're losing their money. And this is our chance to get in on some of those gains. So whenever you hear recession, you need to think, oh, it's a party now because I'm working my W-2 job and it's time for me to get in the market. That's the best time to get in. So recession, you need to just have just bells and whistles going off in your head when you hear that. And when you hear a bull market, you need to step back and say, is everybody buying in? Everybody to get dropped on and smoked, right? Like earlier, what was it, 2021, late 2021? Oh man, the market was on fire, right? First day of the market, January 2nd, 2022, all the way out until June, July. Come on now. When we see the market pumping up, you really got to say to yourself, okay, yeah, I see the headphones coming in the chat. The family is here. That's how we do. When we teach, you got to put your headphones on. And the reason is, if y'all see them coming in the chat, we talk about this on my channel. We say things like, for example, you learn much more when you listen than you ever could when you speak. Why is that? Because you already know what you think. You already know what you want to say, but you can shut your mouth and then listen. Even the smartest people, there's always something to learn. And now that's why you got to open those ears up and listen. When the recession is coming, guess what? Kenan, Larry, Mo, we know what time it is. It's time to pick up our favorite stocks. We know the iPhone 14 is scheduled to be released or at least shown in September. Oh yeah, we want to see how Apple's going to do with those earnings, right? We want to see what's going on with that. We might be able to get in and ride that wave. So we looking at it just like that. A recession's coming. It is what it is. We were in a recession. It is what it is. Proper preparation prevents poor performance, and that's how we getting down.
Hey Mo,
Yeah, what's up?
Ask me if we're in a recession.
I got to tell you, Larry, I was thinking to myself, I wonder what Larry thinks about if we are in a recession. So what do you say?
I'm glad you asked, Mo. So,
yeah, I got you.
So listen, we are in a recession. We are in a soft recession. As a matter of fact, if you look at the data, most of the times when we are in a recession, after the yield curves and after 2 quarters of straight down GDP against rising interest rates, rising inflation, we're in a recession. So here's what the Fed is going to do. He was trying to get to about 2%, right? Inflation, right? Then it's going to, then 2.5 is going to be acceptable. And then before you know it, he's going to say, you know what? Well, 3% isn't acceptable. When you hear that, you know for sure they know we're in a recession. So again, I got to say this again. The recession of 2008, when did they announce we were in a recession? Because the Fed can't announce it. There's a special committee that announces. You know, it's not true until it's like if, you know, I walked up and Stock Mo just hit me and a referee comes, no, he didn't hit you until I say he hit you. Well, I feel the pain.
Yeah.
You understand what I'm saying?
Good analogy.
And so the
I thought you were gonna say something about Chris Rock for a second.
Yeah, you know, I was just trying to, you know, because if I was Chris from the west side of Chicago, oh boy would have been rolling down the stairs. Then I'd have prayed for him, Saints. So the top 20% of earners make up 50% of the spending. Just think about that.
Yeah.
They not feeling this, but so the Walmart CEO in the Walmart reports, you know, one of the things that they said that remind me of 2008, that top 20% is now in Walmart. They're now shopping in Walmart. That's the telltale sign. Remember, the top 20% of earners make 50% of the spending. Yeah. So when those numbers come out, you got to understand what's going on. And of course, consumer spending is going up because we're paying more for food and gas, right? So we're in a soft recession. Then most of the times, the market actually, S&P actually hits new highs before the worst of the recession coming, which it may be the first half in 2023 now, right, Mo? And then it comes down, right?
I think.
I do too. Yeah, that's right. I'm from the hood. I'll beat your butt and pray for you. So, but do we run in fear that we're in a soft recession right now? Absolutely not. We can ride the wave, ride this market up. A lot of you guys been jumping into these run-ups like BBBY, and there's money to be made. AMC, GME, you guys been getting these plays. There's money to be made, but just know in the short, long term, you need to be establishing those positions, right? So myself, I got a hedge against a recession portfolio, just like you just said, Mo, with the financials. So don't just invest like the coast is clear and we in a new bull run, because if you look at the charts, we're still down, but be ready for either or and make money safely. That's all I'm saying. But I believe we're in a soft recession, right? All right. So, Mo, I'm going to start with you. This is the question that a lot of people want to know. When do you think the small cap growth stock will be back? So, when will it be time to start investing into the charge points, the DKNY, the PLTR, the Palantirs, and the DraftKings? When do you think those will take off again? Because those may have bigger multiples than say, an Apple or Google or Microsoft?
Oh, they're definitely going to move more. I mean, let's be honest, we don't have a time machine, but if you were invested back in the middle of June 16th, that was when the NASDAQ kind of bottomed out. And since that day, it is up 21.5% right now. And
Yep.
so, a lot of these small caps, a lot of these big growth plays are rolling up multiples of that 21%. And so when you ask me, when is it the time to buy? Well, obviously, we don't know when it's going to bottom out. We didn't know it was going to be June 16th. Anybody out there that tells you they knew, it's ridiculous. No one knows. We have ideas. We have thoughts. We, based on historical data, that this could be it. And for our sanity here, it was. We can look back in time, see it. And now I think the question is more, where do you see the next bull run that lasts 4 or 5 years for these? I think that's the appropriate question. Not, hey, can we make some money in the next couple of months? I think we're going to continue to make it. It's not can we make it. We have made money because I was almost fully invested back then, and the money has been rolling in, and it's fantastic. It doesn't mean we're going to call it right. We could see the market drop back down to new lows right now. But I don't think that's going to happen. With that new $1 trillion through the chip bill, through the Inflation Reduction Act, which don't even get me started on that name, but with those two things, it's almost $1 trillion they're spending. That's going to juice up some things. And you know what? What's the next big stimulus they're going to do? And that is the student loan. They're going to come up with a decision for student loans. I think they forgive 10 grand, and I think they extend it all the way out till January 1st for repayments. And I think I believe, if I'm not mistaken, put in the comments if I'm off here, but I believe it's going to add 0.3 to 0.4 in inflation back on if they do that. It's going to negate everything they did in the IRA Act, and it's actually going to make it even worse if they do the student loan and do that. So for those who it helps, that's fantastic. You're going to get help on the student loans. It's all good. But for those that don't have student loans or anything, if they do that, it's going to add more inflation pressure, thus making the Fed overstep again, because inflation is going to get hit again. And that demand, because everybody who has student loans, they're allowed to go another 4 months of not paying, and you got forgiveness. That's going to free up a lot of money to be spent into the economy, and that's going to hurt. So to answer your question, I'm going to make it simple. I think we see a pretty serious recession. I'm not saying a minor one. You're not going to see what we saw these 2 quarters. I think it's going to be pretty serious. I think medium to hard. And I think once we hit it, once we start, and I think it starts late Q4, maybe into Q1, I think it lasts 2 to 3 quarters. And I think the Fed panics. We get stimulus checks back like we did under the Bush presidencies. And I think, and I believe this, once we get close to the end of that recession, you're going to see growth stocks. You're going to see small caps. You're going to see them run for 4 or 5 years. But it's going to get ugly before it gets better. You could see new lows in 2023. But I know we're all going to be prepared. So do me a favor, everyone, before we get out of this. Hit the like. Do me a favor. Set yourself up. There's a Moomoo link down below Larry's video. Get that account. Get the free stocks. Get everything taken care of to set yourself up moving forward to have access to the Hong Kong exchange. Because I think China's going to go aggressive quantitative easing. You're going to want to be able to get some of those stocks on their exchange. There's a lot of things that we're going to do moving forward, but it's going to be good. So what do we always say? Put the coffee mugs in there, put the oven mitts in it, and put the cats in there. Yeah, put the cats in there. Let's do this up. Let's get these likes up too. What's up with this weakness, man? Let's get this thing all the way above how many people we got watching. Take 1 second, hit the thumbs up, get this thing rolling. And how about a shout out for where everyone's from? I love reading where everyone's from, and I like to see who's in the house. Just put that in there for me, folks. But that's what I think, Larry. Once we get through Q2, Q3, I think you're going to see a massive amount of money made in small caps and growth stocks. But you're going to see a lot of money lost as we get to that bottom.
I agree. Yeah. And hey, you guys, hey, hello from New York City.
Love it. Love it.
Love you guys.
Everybody. I'm about to run a call option on the like button. I'm playing it for 1,000.
I'm going call. Yep.
We got Haiti in the house.
The 1,000 strike before 7:30. I'm running the call.
We can't. Hey, we can't give an island away like Mr. Beast did for his 100 millionth subscriber. But you know what? We can another shout out. Something. I wish we could
Hey,
see
I
who it
want to
is. That'd be
say
a lot more
thank you
fun.
for the super chat to Quentin Cook. We appreciate your super chat. You know what? Before
Let me
I
tell you
forget
about
it,
Quentin, man. That's my dog.
I
Quentin's
can
my
see,
dog,
man.
right? He's in the Discord with me, right? My dog, straight up. When Lucid was like $17, right? Like, Quentin, I think I told you about this, right? When Lucid was $17, it was like it had went up to like 40. It came back down to 16, and nobody knew that Lucids were on the road testing at the time. Quentin was the first person to know because he drives right by where they built the first factory.
Yes.
And then he saw them driving the Lucids. This was way before they knew any of them were on the road. So we got to pick it up at like $17 before it ran all the way back up to like 40 because of Quentin. So shout out to my dog. Straight up. You always gotta give people their flowers and let them know where the information is coming from. Remember, I tell you, when y'all speak, I know when I speak, you listen, but understand when you speak, I listen too. Straight up. We family. We doing this together.
That's
and Mo,
it.
you just hit a great point that just reminded me. Like it stung what you said, but you didn't even know because I didn't say anything. I didn't give you a reaction. You said student loans and how they might print money and all these different things, and the government is just digging a hole. Basically, understand this, right? Let's get to some of the numbers. Student loan debt in 2022, everybody's student loan debt of America added up to $1.7 trillion totally for all history, right? You add it all up, 1.7 trillion. This is a hole that the United States has been allowing the universities to get over on us on.
Yeah.
During COVID, out of nowhere, pandemic, they got $9 billion to deal with that. What happened to the student loans? It would have cost way less to deal with the problems of the past. But guess what? The problems of the past don't go away. They get added on to the problems of today. So then it's just getting worse and worse and worse for the government. So we got to say to ourselves, we can't rely on them. We can't rely on them. We can't depend on them. What we got to do is we got to make it happen for ourselves. And how do we do that? You got to make sure that you're using your top resource in this world. Whether you want to believe it or not, the way that this society works, money, and not my opinion, is just the way that it works. Money is more important than a person.
Absolutely.
If
That's why they are literally making money off of prisons right now. Don't even get me started right there.
Check this.
They're publicly telling you they're trading the prisons because the government has hired all of these accountants and they're getting ready to send a lot of people to jail. And that's one of the things that I will never invest in. I will never invest a dime into prisons.
Yeah, I can't get dirty money.
I saw that. I saw Michael Burry. He has that Geo Group Inc. That's the only stock he owns. I looked it up. I never heard of it. And it's they specialize in ownership, leasing, and management of correctional detention and reentry. It's
if you and Kenan, I want you to finish, but I gotta say this.
Say it.
If you have a apartment complex, let's say you have 40 units, right? In order for you to sell that, you can't sell it when it's half empty. You got to get it 80% occupied before you could sell it, right? And so that's why you have all of these changes going on with these apartment complexes. For those of you that have ever lived with one and another company bought it out and they started to let trash move in because they have to have a certain amount of occupancy. When a prison makes money based on its occupancy, they have to keep those prisons full. That means that even if they got to go get a Jane Doe, right? And they got to just snatch them off the street just to put numbers on. Trust me, like Kenan said, money over everything. They will make that happen. There will be innocent people in prison. All right, I'm off my soapbox. Go ahead, Kenan.
Yeah, and if you look at the way that the laws are now, what you'll see is you murder somebody, you might get 25 to life. You heard that before, right? But if you rob billionaires like Madoff, guess what happens in this case? And not only billionaires, but you rob for billions of dollars. In this case, you getting 100 years, right?
Yeah.
What does that tell you? How are things perceived? Right. Life or money? So with that known, we could cry about that, or we could say to ourselves, if they value money so much, then I need to use the money that I have as leverage, because this is what they want from me. This is what Apple wants from me. This is what BlackRock, the largest asset manager basically in the world, this is what they want from me. They want my money. But guess what? We got to make it so that we are using it to our advantage. We got to use every single dollar that we have kind of like a little soldier. That's how I want you to think of your dollars. And you just building your army up. And your army is fighting for you to be financially independent and financially free, family. You got to save your money so that one day your money can save you.
Yep.
Yeah, hey Larry, I got something for you. Just
Go
because
ahead.
I'm from PA, that whole paying to get people in there, a lot of people will hear you say that and not believe it. And I want to be the first one to tell you something that for those that don't remember, I'm a little bit older. Look up Kids for Cash.
Yep.
This was big.
Yep.
This was big for my area where I was at, and the central PA, Luzerne County. They allegedly, like my friend here, Kenan, would say, no one's trying to get sued or anything. But allegedly, from what I'm reading here, is that the United States attorney alleged that a judge and another Luzerne County judge had accepted nearly 2.6 million alleged kickbacks for 2 private, for-profit juvenile facilities.
Yep.
And keep that in mind when you think, hey, everything's good in the world. Read Kids for Cash, watch the documentary. You understand how this whole thing works for profit centers and other things. And I got to tell you, I remember being a little bit younger. I was still an older man at that time. I was disgusted by this. And so I just wanted to bring that up. And remember this, just to play into the student loan, which Kenan's talking about.
Right.
The reason I think that we're going to have a lot of issues in that recession, I already think the Fed's going to overdo it into Q1, Q2. When will the student loans, in my opinion, I said this at the beginning of the year, that they're not going to come due until January 1st after the election, but that's going to be a major hit on the spending, the demand. It's going to be bad. And so even though we have a little inflation hit now, if they extend it, which I think they will, and they forgive some, wait till January comes. And the Fed already did it. Rates on credit cards are going through the roof, housing, loans. And all of a sudden now we're going to make that $1.7 trillion be repaid. Oh, it's going to be the final nail in the coffin for a serious recession. Yep. And that's my take on that.
Yep.
Hey, taking a hole and taking it deeper.
We're going to keep it popping. That's it. I just want to say, SoFi, I'm going to be bold. I'm going to make a bold statement on SoFi. I see a lot of people. I didn't look at SoFi today, so forgive me. I don't know where the price range is today. It
got hit.
It got hit. Good, because I'm looking for it to get hit. I wanted to get hit because in the long run, this is just me. Remember, Kenan said it at the beginning. Anything we say is not a suggestion for you to buy, hold, or sell. For a long-term stock, I'm definitely going to be getting some SoFi and some Tilray. Because Tilray, the laws will change. But SoFi, FinTech, and what they're doing, online banking, just digital banking is the future, right? So it's just like EVs right now. It's like Lucid right now. They in the first quarter of its span, you got to spend a lot, right? And they're going to be getting hit. You're not going to be making money. But this is the type of platform. If you remember how Tesla got started, Tesla was just trash when it started. It just kept going down, up, down, losing quarter after quarter, quarter after quarter. And then when they found their footing, it just shot up. I think SoFi is one of those companies. I'm not going to quote unquote load up, but when it gets low enough, I'm just going to grab some and I'm not going to look at it every day. I'm just going to grab it for the long run. That's just me. All right. Kenan, let's talk about the craziness of this week. Kenan, what's going on with GME, AMC, Bed Bath & Beyond, BBIG? I sound like a rapper right now. Talk to us.
What's going on? GameStop, AMC, Bed Bath & Beyond. Let me tell you. Oh, hold up.
Oh, they're calling to say, give us good news.
Hey, that's Nancy Pelosi.
You said where are the apes? Oh, they in the chat. The apes are in the chat. they asking for you, everybody. They're asking for you.
Ask
Let them know
Pelosi
that you in the
what
chat.
That was good.
Hey,
Let
Kenan.
them know you in the chat.
Oh
This
my!
is what's
Ask
going
Pelosi
on,
You
what she's
nailed it.
everybody.
buying.
Apes in the
Oh,
chat,
that
baby.
was
So
good.
Ah,
check it out. We got this going on.
Oh, I
On
love that.
Monday. It is now what day of the week? It is Wednesday. On Monday, we are coming up in less than 7 days. We will have APE AMC preferred equity units, right? This is why it's important. This is why AMC started to pop. This came out of nowhere. Adam Aaron told us a while ago that he was going to pounce. And him pouncing, he said that he was going to now do this 1-for-1 dividend for every AMC share that exists. The reason that that's important is it doesn't necessarily mean it's going to make AMC short squeeze, but it does give us our first real chance to get a count on all of the shares that are issued. Now, this is why a lot of people, oh, you see the apes coming in the chat, baby. That's what I'm talking about.
Here. Here's the
That's what I'm
apes.
talking about. They called, and I knew y'all was going to answer the call. Y'all got my back. Now, here we
That
go.
was cool.
That AMC, there are 516 million officially issued shares that we know exist. Adam Aaron, he said it himself. You could look at the SEC filings and everything like that. There are 516 million shares. Now, the whole thesis about an AMC short squeeze is there are more shares that exist than were actually issued. And then they were sold short into the market, aka they were printed out of nowhere and then bet into the market. But there might be, and again, there's no confirmed evidence of this yet, but there might be, let's say, double the amount of shares that exist. All of that buying back pressure would cause AMC to start to run up, which would squeeze the short sellers, which would be a feedback loop and make it continuously run up. Now, on Monday, imagine that we're going to get a 1-for-1 8 dividend for AMC share. What if you see, hey, I didn't get any ape. I got AMC. I got 10 shares of AMC, but I didn't get any ape. Everybody else did. They may not have accounted for your shares because the ones you have may not potentially exist really, right? You would still be entitled to the money, but this would be the first extremely hard evidence that there are fake shares that exist because everybody wouldn't get the apes. Now, this does not mean that it's going to squeeze. Some people are doing this clickbait on AMC telling you that this is what's going to make it squeeze. And I know that y'all come to me, Mo, and Larry because we actually talk about the facts and don't just try to just blow smoke. Right? A lot of people are talking about ape and telling you this is going to be it, family. They've been telling you that same thing for over 2 years. But again, make sure you hit that like because my call options hit. We had 1,000 likes, by the way. Let's get it.
Check it out, man.
Let's get it.
There
I love that. But
there
I see the apes is in the building, and just know when AMC ape shares come out, we got a whole lot more to talk about, family, because we got to see how it's going to work. AMC, the company, they plan on using ape so that they can strengthen the company. Many people have mixed feelings about that, but we got to see how it's going to play out. And we want the short sellers to give us all of the money that they got back. People don't know this, but hedge funds oftentimes, and you may have heard this in passing, in your life about hedge funds, but you're starting to hear more about it now because of the GameStop stuff, the short squeeze stuff. But they make the majority of their money betting against you. And they've been doing it for a long time.
Say that again.
They've been doing it for so long.
Kenan, say that again, Kenan.
The hedge funds make their majority of their money betting against you. So, for example, did you know, and we were talking about this right before we got on the live, we were in the background, about how BBBY, Bed Bath & Beyond, they ran up one day, come down like crazy next day. Ran up one day, come down next day. It was up 400%. What's going on here? The retail investors are buying Bed Bath & Beyond at an unprecedented all-time high rate in which it never happened before. Retail investors buying into Bed Bath & Beyond over 72 to 73 million in like a single day. So then with that being said, the hedge funds, the market makers, the people who are in the background, Wall Street, they're betting against you. So we running it up, they're pushing it back down. We run it back up, they're pushing it back down. The only thing is, they feel as if they have more resilience than you, so then they usually win over time. But that's why we got to educate ourselves so we can stop giving that money back. That's what I want y'all to know. And shout out to all the apes in the chat. I seen them. I got to scroll back and just keep looking at all y'all. I appreciate y'all.
Hey, do any of you guys know this stock, Kenan? You know this stock?
I do not.
I do not either.
Are you sharing the screen? Oh, wait, super chat, Gene.
Yeah, this is a super chat. Any of you guys know that stock?
Shout out to Gene. No, I haven't seen that one.
I'm sorry, Gene. I haven't either, but I've heard of it. I'll check it out, and if I like it, I'll do a video on it. Yep. Ford. Let me address this one. Ford, and then we'll get back to a few more questions. Ford. I believe that out of all the legacy car companies, Ford will be the one that chase Tesla the hardest. He's already said it. I believe that Ford will be a moneymaker long term. Ford already has the infrastructure. I believe Ford will be able to take advantage of the tax credit. So let me check on that. But I believe that they will. With Oh yeah, you know what? Josh talked about this stock, y'all. Josh talked about it. I will check it out. But Josh talked about it. If Josh talked about it, I like it already because Josh knows what he's talking about. But Ford is going to be good. All right, so let's get into some more questions, gentlemen. I did that already. I said, listen, I want to ask both of you guys this question. What stock is it that you guys have been waiting on to get it at the right price? Let's start with you, Mo. Like, what is the stock that you're waiting to come down to get at the right price?
Well, that's tough. I got a list a mile long on that one. There's a lot of stocks that run up real nice over the last 2 months. And obviously, some of them are up 30, 40, 50% off of those lows.
Mm-hmm.
But and you can name your charge point, your Neo, your Tesla, Lucid, SoFi, DraftKings. DraftKings one, I think, has a really bright future. Out of all the growth, the really risky plays out there, I love DraftKings. I think DraftKings is going to surprise a lot of people. I think it's going to dominate the sector. And yeah, it's expensive. It's expensive. November comes. We know California's voting to okay the online sports betting. We'll see how that goes. I think that's going to pass. And I think DraftKings is going to move right into there. And that's big. And I think as they go forward, they're going to have a good opportunity. So I'm watching that one. Keep my eyes on any downward turns. But I have to tell you, I absolutely love Apple right now. I
Come on.
absolutely
That's
love
exactly what I
Google,
was going to
and
say.
I
Yes, sir.
absolutely love Amazon. If you
Yep.
buy those three and just let them go, I think you wouldn't be disappointed in 5, 10 years when they're up a considerable amount above and beyond the market. And so I know it's not like going out on a limb when you talk about Amazon, Google, and Apple, but Apple is one I absolutely love right now,
Yes,
and I
me
think
too.
Yep.
could do some good things. So, there's a few stocks out there I'm looking at and watching. Like I said, some of them are big name ones, and you're like, well, how high are they actually going to go? I know the small caps and the growth stocks are always going to be more risky and give you higher return or a lot more losses. But if you're looking at some solid plays and you want to be able to sleep well at night, look at those three. They should do very well.
This is not financial advice. Take it how you want it. Download the Moomoo link in the app or in the description if you don't already have it. I want you to open up a new account.
Come on.
I want you to compete with this account. When you open up the Moomoo one, this is for my people who don't already have it. I just need you to get a new account. Only allegedly, hypothetically, let's imagine somebody else did this. I'm not telling you to do this, but only buy Apple in that account. Trade in your normal account, but only buy Apple in other account.
Mm-hmm.
Look back in 2 years and see who won.
Yep.
That's how I want you to really, when we talk about having multiple accounts, you got to be doing these things. So then guess what? You running a scientific experiment. You got your control, and then you got your other variable over here. So with that being said, you say, oh, this one is the one that's yielding results. So then you double down on those kind of things. So go ahead and just do that. And I want you to just really think, because I was talking to a few people, older generation in my family. Kenan, I know you're talking about Shiba, you're talking about AMC, you're talking about options, all of these other kind of things, Lucid, Tesla. Listen, I don't know how to trade, Kenan. And I say, okay, look, you don't have to trade to win. You can invest and win. You probably will win more I'm not telling you this, but if you had an account, you just opened it and it had Apple in it, and you got it, let's say that you bought it at the worst time, right before the collapse. It was $80, and this was in February of 2020. It dropped all the way down to $50, right? Whoa, that's almost 50%. That's headed towards 50% down. Guess what? If you just held it for a year, 2 years, we up at 174 right now.
Mm-hmm.
With Apple, even if you bought it at the worst time in the past, it's way better than buying it even at the best time today. So you got to just think, you buy bangers that your grandma knows, that your uncle knows, that people down the street, they know this company. It's not a new company. They've been killing it since IPO, and they only about to do even more. Come on now. This
Look
is
at
the
this.
company that somebody would tell you, I'm not telling you, not financial advice, but somebody tell you, yo, this is the one that's going to take you to the moon. And then you trade in your other accounts. That's how we rocking out.
No lie, no lie. My number one I've been waiting to really pile up on has been Apple. And because, listen, show me another stock that you see this, that they're literally, look at this. This is 5 years.
Mm-hmm.
This is 10 years. This is the max. It's just, you not outperforming this over a 5-year period. It just keeps going, and there's little volatility. Look at this. You know that this is COVID right here, right? And look at what happened after COVID. Because you and I know that not just the hardware, they make a ton of money off of the software. I believe one day they're going to be giving these phones away. And you're just going to be, they're going to make so much money off of the software. So it's not going anywhere.
Fact, guys?
Go ahead.
You want to hear a quick fact?
Yep.
When you look at the S&P 500, it's down year over year by I want to say less than 1%. It got down way lower than that, but it's coming back up, right? It's still down on the year. When you look at all of the Fortune 500 companies, particularly the mega stock companies, the mega cap companies like Google, the tech stocks, Google is down year over year, right? Amazon's down year over year. These are still great companies. We like the price, right? Facebook down year over year. Netflix down year over year. Apple never went red.
You know what saved the stock market today?
It didn't go red.
You know what saved the stock market today? Apple did.
Yep.
Apple saved it from going down worse than what it did today. And it didn't really, today was nothing compared to the run-up we've been having. So this is not the market tanking, but Apple held it strong today. And because of how much of the market it's worth, it's the big dog. There's no other there's no other company that has as much cash as Apple does, right?
And so, they could buy Disney in cash.
Exactly.
They almost did.
Yeah. And so if you've been chasing BBY, and if you've been chasing BBIG, AMC, GME, Elemental P, if you've been chasing any of these stocks, I thought you school teachers might like that. If you've been chasing these stock and not loading up, oddly enough, these last 3 months have been the best time to load up on blue chip companies. This is the best. I'm telling you guys, this is the best time to be loading up on these blue chip companies. And if you can't afford the whole company, buy some fractional shares, man. Download, click the link below and download Webull and get some fractional shares. But now's the time. Go ahead, Mo.
I was just gonna say with this Apple. Hold on.
Who's that lady talking to you, Mo?
Oh, sounds like Alexa talking in the background.
Alexa.
I could hear it. But anyways, I was going to say this about the Apple. Recent report just came up, and they said Apple's laying off 100 contractors who are recruiters for Apple. And the thought is that they said what they're doing is they're slowing down their hiring, reining in spending on hiring, new hires, all in anticipation of what? A slowdown when? 2023. Yes. So if you read all the articles out there, including Apple,
the big tech.
I love this, that they're being proactive. They're not waiting for everything to collapse, even though the market's going higher, their stock's going up. They're not saying, hey, let's just go. They're actually slowing down their hiring, and they're getting rid of 100 contractors who hire for them.
Exactly.
That tells you how serious they are in what they see in 2023. So if you hear us talking about a potential recession in 2023, don't just take our word for it. I always say, don't look at the words, look at the actions. And right now, Apple is screaming what they believe is going to happen. And I still like them better than most stocks to get through.
Hey, let's answer this question. And then we're going to answer this question.
I got something real quick. So you know how companies like Apple, they end up with a lot of cash, right?
Right.
Microsoft, they end up with a lot of cash. And then you wonder, we know that cash over time loses money. Like, for example, 8.5% this month, right? Compared to last year because of inflation, the dollar is losing its value. What do? They say, we know what's going to happen 5 years with our company, 10 years with
Yep.
our company. They reinvest into their own company. Microsoft buying their own stock back, Apple buying their own stock back because they feel this is the best thing to invest in. Now,
Yep.
what's interesting about that is they have plans to reinvest so heavily into their company, not just Apple. I'm talking Microsoft, Amazon, Google, and like many companies like that, that Joe Biden is talking about increasing the taxes on buying your own stock back
Yep.
because they know that this is where it's at. But they got to incur those taxes that on those. We don't have to because we are not them. So we could just buy the stock and then run up. And then when they buy more, we run up even more. So, and this does not mean, let's be absolutely clear. This doesn't mean that you can never trade Bed Bath & Beyond. We like to trade Bed Bath & Beyond too. This doesn't mean you can't trade any kind of what they would call a meme stock, right? We like to trade those too. But you got to remember, compartmentalize. Spell that out or spell that. Say it 10 times fast, right? Compartmentalize. So you can say, okay, here is where I trade, and this is how much I trade. Here's where I invest. This is how much I invest. And then guess what? You will see your wealth grow over time. In 2023, you should have more money than all times in 2022. 2024, right? You should have more money then because you are building your wealth. You're not just only building your ability to trade, right? It's not all about trading. It's about building your wealth and then getting better at trading. So then you could get into way less risky trades. If you have $100, you thinking, how could I turn this into $200, right? But if you have $100 million, you're not going to take 100% risk. You might
Come
try to
on.
make 1% today.
That's
That was
it.
$1 million in a day.
That's
You
it.
see what I'm saying? So
Yep.
you want to get to a point where you have so much accumulated that you don't need to go for these 20, 30, 50, 100% increases. You only need small increases that's paying all of
Exactly.
your bills. That's
I
how
could.
you got to think about it, family. This is a long-term game. This is a marathon. This is not a sprint, family. Straight up.
Yep. One of the wealthiest people I talked to, and I talked to some pretty wealthy people, he just said, it was an older guy years ago, and he just said, 1%, Mr. Jones, 1%. And I was just like, how can you make money on 1%? He said, it depends on how much money you got. And
Mm-hmm.
he was, and I got it. He said, if I can make 1% 5 days a week, I'm good. But it was nothing for him to drop $250,000 and make 1% a day. Do the math. Like
Mm-hmm.
it's so, like you said, they don't have to risk as much, And so I want to answer this question right quick, and then Mo, I want you to do a station identification break and talk about the links. I'm going to answer this question. If a worse recession is coming in 2023 to 2024, would it be better to wait until then? Remember,
Larry,
anything we say is not advice.
Larry,
Yeah.
Gilberto Barrero or Barrero. Big dog, if I'm saying that name correctly, no disrespect. He got a question I think you can answer.
Okay.
Gilberto.
What's the question? I don't see it.
It says how to separate your long term and your short term.
Oh, that's good. That's good. All right. So this is how I separate my long term and my short term, and I'm gonna answer that too. I'm just gonna tell you. I have links below, but you don't have to use my links. Use whatever platform you have. Use different platforms. I'm telling you, the best thing I did was get multiple platforms, because you cannot look at one platform and take care of 30 stocks. You can't do it. You won't be effective. But when I have my long-term stock in one platform and I have my swing stock in another platform, it's easier for me to go to, right? And so what I would say is, first of all, get multiple platforms. Second of all, understand what stock is a long-term investment and what stock is a swing stock. That's the first thing you have to do. We know that Microsoft, Apple, Tesla, Google, VOO, VTI, those are all long-term stock that are going to perform. I just showed you guys Apple. They're going to perform year after year after year after year. Even down years, over a 5 to 10 year period, you're going to make bank. The charts don't lie. But there's some stock that you literally can make a 50% pop, 100% pop, but the stock itself may be trash, right? Look at what happened this week with some of these stocks that are going to go up and then come crashing back down. So those stocks that are just running up and coming back down, and they're running not based on what the company is worth, not worth the PE ratio, they don't have any future earnings, they don't have any of that. Those are just get in and get out. So those are swing plays. You need to have one trading app for that, and then get some blue chip, high growth companies for long-term investing. So hopefully that helped you answer your question.
Yeah,
So
and let's do that station break. Let's do the
there you go.
station break. Then you get to that other one. So, folks, we got an over-under on this like. I'd like to see this thing get up to 2,000. So if you guys could just take 1 second, do the family a favor, put in the comments the oven mitts, put the coffee mug, put the cat, and hit that like button, hit that thumbs up for us. We'd greatly appreciate it. We got some links down below over to me and Kenan's and any of my family over here visiting. Hit Larry's. Subscribe to the channels. It helps us out. It helps to bring these live streams together. So
Yes.
take 1 second. Subscribe to all 3 channels. We bring a lot of little pieces of information, and
Yes.
this team working together is easily better than any component by itself.
Teammate.
And like Larry was saying, look, have the different apps. They're giving you free cash. Don't let it on the table. Why would you do that? If you could only have to put $100 in over at Moomoo to get 6 stocks worth up to $15,000 altogether, you do it. Then, if you know what? Get used to it. Take advantage of the Hong Kong exchange and the U.S. exchanges, and then have the Weeble where you get up to 12 free stocks for $1. Get them all. And more importantly, though, get that like button up to 2,000.
Let's go.
This is
Let's
ridiculous.
go.
Hit that thumbs up one more time and make that thing fly. I got to call. You know what? Kenan went with the 1,000 call option. I
Come
went
on.
with the 2,000 call option. I'm trying to make big to the moon money.
To the moon. hey guys, I want to show you.
On the like button.
Hey, I got something to show. I got something to show the good people, man. Listen, for those of you,
I got one. Go ahead.
All right, for those of you that are in the Florida area, this is gonna be crazy.
This is big.
This
is big.
This is gonna be crazy. Can you imagine? I used to imagine. We used to talk about this, but I want you guys to look at this conference right here. Watch this, guys. This is gonna be so cool.
It's gonna be huge.
Look at this. This is FinCon 2022, and they have speakers, right? They're going to be helping, like, if you want to grow, for those of you that want to be a YouTuber or you want to be an influencer on Instagram or anything like that, they help. They're going to help you with that. All right, you guys can read all of that stuff, right? So that's cool, right? Real cool. Yep, that looks interesting. But check this out, good people. Look who's going to be under the same roof. Look who's gonna be under the same roof. Look at this. Watch this. It's gonna happen. Bam! Look, Doc Mo slid in there, and then look who peeking around the corner.
Oh my God!
Boom! All in the same building, all under one roof.
Oh my God! Yes.
Y'all like that?
Something else.
Y'all like that?
That was awesome. Was that a little video, or did you just slide them in there, or what?
Yeah,
was that,
I got
Larry?
skills. I got some skills.
Yeah.
I got some
go.
editing skills.
My.
A little something.
That was good. That was
so
good.
Listen,
I'm looking forward to it. Yep.
Yes, sir. In my bio below, I have a link. First of all, I got a link for these gentlemen's pages. Just click in my bio, in my description rather, on this. If you're on your cell phone, just click the heading. But on your computer, you will see a drop down. I want everybody to subscribe to Stockmo and Kenan Grace. Everybody. If you're subscribed to me and you're not subscribed to Kenan Grace and Stockmo, you're doing yourself a disjustice. I'm telling you. And then I have a code for FinCon under there. So all of that information is in the bio. All right. So I just wanted to show y'all that, man. I thought, wait a minute, I gotta do that again. I gotta do
September
that again.
7th. September 7th, 8th, 9th, and 10th. We're down in Orlando. If you want to come on down, we're going to be going down. I'll be driving through South Carolina, North Carolina. Man, it's gonna be fun. We're gonna have a good time. Me and the
Bam, Mo sliding in. Kenan peeping around the corner, and then I just pop up.
Yeah. Yeah. That's awesome. That's gonna be a fun time.
Yep. So
got
for
some
those of you that want to
steak
be
dinners.
influencers, we're going to be helping you guys with that. So I can't wait. I can't wait to kick it with them, man. It's going to be a party. Yeah. Oh wow.
Yeah,
Hey,
that's dope.
we are almost. I think we are. Yep, 54 minutes. I'm gonna try to hold it for an hour. Anything you gentlemen want to talk about?
That's funny. That FinCon
Yeah,
roll-in, right?
I
It
do.
looks like when the
Yeah.
Avengers first met each other.
Oh yeah.
Oh, well, you know, good things happen. And you know what? People don't know this about us. Let me just say that Kenan and Larry and we all text each other all the time, but
Yep.
we've never had the opportunity to have all three of us in the same room, sitting down, talking, swapping stories. This is a first for us. And now we're going to be together with all you out there. For those who'd like to join us, I'm excited. Now, to say that, because I know we're running out of time, Larry, I want to talk about Ethereum.
Mm-hmm.
And I know we didn't talk about crypto that much in this one.
Yes. Let's get into
you
it.
said, what do we want to discuss? Look, Ethereum, the merge is coming. Rumors have it's going to be the 15th or 16th of September. We know the one tweet said the 19th of September. It's coming. We've been waiting patiently for years for some of us, and it is here. That is going to be a major catalyst. I know people are like, hey, there's a lot of it locked up. Yeah, of course, just like stocks when they're locked up, you'll have some volatility after we get to the point that they allow that to be released. But remember, the rewards go from proof of work to proof of stake. And a lot of people like me are going to not only keep it, we're going to add to it. And so don't be scared off by that. And people have been asking me, where do you see Ethereum going if everything works out well? I think the promotion up to that point, a lot of positivity, a lot of press, people realizing this is a game changer. This is the catalyst that makes Ethereum overtake Bitcoin. This needs to happen. If it doesn't happen, I don't think it does, but I do believe it's going to happen. And you're going to go ahead and see Ethereum take that next step towards being the big dog on the porch. And I believe Ethereum hits 2,500 within probably 90 days of the Ethereum merge happening successfully. And a lot of other altcoins are going to look very, very nice. And trust me, Bitcoin fans want to see this go off without a hitch because it's going to help the entire market.
It
will. So that's something I think I just wanted to throw out there for those wondering. We got some big things coming up in the next 4 weeks. Not just us getting together down in Orlando. Of course, that's bigger than all of it. But we do have the merge coming. And then on the 20th and 21st of September, we have the Fed meeting. A lot of things to look forward to,
Mo,
folks, during those.
What do you think that's going to do for Ethereum Classic? That get asked a lot.
I don't. You know what? When they do the hard forks and you have these different the different altcoins, you know, Ethereum Classic, Ethereum. I always say anything that's good for the entire crypto industry. Bitcoin goes up, Ethereum goes up. What do you think happens to the altcoins? They go up. Yep. And so I would argue, you know, I get it. They're not going to be doing proof of work on Ethereum. So the miners, I think, you know, this is the big question most people say. Is it going to help any of the other cryptos to still get mined? Of course. A lot of equipment is out there. And that equipment still needs somewhere to go to mine. And so they're going to find other altcoins that do the proof of work. And they're going to try to put them on there. And I used to do that myself. I had a lot of machines run. And so you have these programs that automatically select the highest paying altcoin that you can do proof of work through. And then those miners just are constantly switching around. And so once Ethereum's gone, you're still going to go ahead and see these other altcoins getting a lot of attention. And most of the time they get them and they automatically switch them to Bitcoin or Ethereum, or they turn it into cash. So I don't think the industry for proof of work's going away. But I tell you what, after this is successful, don't be surprised to see more cryptos out there that are relying on proof of work going to proof of stake. That's what I think.
I got to answer this question, and I want you to talk about crypto also, Kenan, and we'll end with you. Listen, I want to explain something about the market, and for those, I know most that are listening have been in the market under 2 years, right? Or around 2 years. And so understand this about the market and the recession. Let's say the recession goes this way and then comes back up. The stock market doesn't follow the recession exactly. As a matter of fact, Mo, you know, if you can go back to prior recessions, the stock market could actually the stock market in most cases rebounds before the recession is over.
Does.
And so
Did a
the
video on
stock
that.
market could have already bottomed out. So to answer your question about DCAing now rather than waiting, DCA works by just dollar cost averaging and not stopping, to answer your question, because nobody knows where the bottom is, right? And so let's just say we've already bottomed out. Let's just say, I don't believe we have. I believe the elevator's got a couple of floors down. But even if the elevator goes a couple of floors down, some of your individual stock may have already bottomed out. Follow? And so that's why the best way to assure the best price, that you're purchasing at the best price, is to DCA long term, and especially with the blue chip stock. So I just wanted to say that how that works is you just continue. So now it's okay to what I plan on doing on my DCA, if we have a floor drop, right, a really floor drop, then I'm going to double the amount that I'm dollar cost averaging in when it goes down lower, right? And if it comes back up, I can always pull back on my dollar cost average. That's another way. It's like a weighted dollar cost average. So hopefully that helped you guys. Kenan, what you got to say?
I want everybody to just think about this. There's so much money out here for all of us, and most people have no idea how much there is to make. And most people, all you need in your life is just one break, one opportunity just to go in your favor, and things could totally turn around for you. But they don't happen by mistake. They say the harder you work, the luckier you look. I want you to keep working hard. I want you to keep reinvesting into yourself, reinvest into your mind, reinvest into your savings account, into your buying power, into your trades, into your long-term stocks. You got to really take this so seriously, right? Me, Mo, Larry, we come on here every day. We take this extremely seriously. We need you to take your own financial freedom and your own financial future as seriously as you take waking up in the morning and going to work, as you take making sure that your kids are raised well. You got to take this so seriously. This is not a game. This is not a joke.
Mm-hmm.
Now we come here, we laugh and we get lighthearted, but it's really a lot of money to be made out here, and it will pass you by if you don't understand that it's waiting for you. You got to make these opportunities for yourself, and just understand. I don't know who need to hear this. Start today. Start today. Whether that be, you know what, you're gonna start eating better. You're gonna actually go to the gym. You're gonna actually start to dollar cost average. You've been hearing Larry talk about this $5 a day challenge, but you didn't start it yet. Start today. You understand?
Yes.
Maybe you doing it
Mm-hmm.
some different way. Maybe you wanted to get the different brokers. Start today, right? There's no need to wait. You in 1 year from now are going to be so happy that you 1 year ago
Yep.
did yourself a favor. You are betting on yourself, and it's time to show yourself that you are a winner and that you got it and that you can make it happen. I'm telling you, just that's all I got for you. And I want y'all to just keep that in mind. There's so much money out here for all of us. And the harder that you work, the luckier you're going to appear. It's just gonna keep happening like that, family. Let's win.
Hey, I'm going to add to that. Thanks a lot, Kenan. I want to add to
Got
that, Michael. I want to look you in the eye in that eye, and I just want to tell you, Mike. This is what I'm going to tell you, and I need you to hear this. Right now, people are treating their employers like trash, not coming in, no show, no call, because they can go somewhere and get a job in another hour, right? That's going to change when we get into the worst of the recession, whether that be, the first or the second quarter of next year, or however long it takes, nobody knows. What I'm going to tell you, if you only have $100, and this is everybody that's living paycheck to paycheck that's listening. If you only have $100 to invest per month, the first thing I'm going to tell you to do is to create more income. And what I mean by that is do an extra hour on your job. DoorDash, do something that someone will pay you for. You have skills. If you got a computer, you can make money. I talked about it before on this program. You can go to Fiverr, Fiverr, I believe it is. And if you can write, if you could spell check, if you could help somebody with their math, there are things that you could do to make extra cash. And just get that $100 up to $200. And if you can't, and $100 is all you can do. But in most times, let's tell the truth, you can have one less Starbucks a week. You know, you can go to one more show less and spend, $60 just for a couple to go see a show. You can do one less of those a month. It's time to get serious and just diversify that. I would take it and split it up, and I would start with simple ETFs, because the truth be told, you don't even need us with an ETF, because you got a whole basket of stock all wrapped into one. Start with VOO or VTI. And when you start, if you're just starting to get in the market, don't chase BBIG and all of that. Establish your foundation first by getting some Apple, Microsoft, Google, VOO, VTI, and many other stock like that, right? Start with a sturdy foundation. You don't build a house on sand. You build it on rock, okay? And so that's what I would suggest to you if you only have $100. But the first thing you need to do is get a side hustle, and I dare you to do it for 1 year and watch how it changes your entire perspective, and watch how it changes your life. We're going to leave it right there, good people. I love getting together with these guys. I absolutely love these guys. Can't wait until we get together. If you want more information about anything we talked about, the links are all below, including Florida, all right? And so these guys have already signed off. I appreciate these brothers. Make sure you click the links and subscribe to their pages, okay? They're going to help you in areas that I can't. Kenan's going to help you in an area that I can't. Mo's going to help you in an area that I just can't. And that's why there's power in numbers, all right? So we're going to leave it right there, and we will see you guys on the next one. Live, love, laugh, and learn. Hey, Mo, give us your sign off.
And like I always say, let's get out there and make some money.
Kenan.
You can't handle the heat, consider investing in the index funds. It's actually a good idea.
Love you guys. We'll see you later. Like that, Kenan. Bye-bye.
Take care.